Central banks will dominate in the coming week, with policy verdicts from the Bank of Japan, Reserve Bank of Australia, the Bank of England and the Federal Reserve. Plus the latest economic data out of the Eurozone and, of course, the all-important US jobs report at the end of the week will all be in focus. Now, all of those major central banks are expected to keep their policies unchanged at next week's meetings. In the UK, especially given recent comments from the Bank of England Governor Mark Carney, warning the markets that loose monetary policy post-Brexit is not a given. But nevertheless, the pound, yen, Aussie dollar and US dollar will all be worth keeping an eye on in the coming week. Now, the Eurozone will release both third quarter GDP growth and October inflation figures on Monday. According to the latest data, the Eurozone generated 0.3% growth, while core inflation is experiencing a hard time picking up towards the ECB's midterm target of 2%. Now, traders remain bearish on the euro, given that the latest ECB meeting failed to provide much clarity on the ECB's future plans about its purchases programme. On Wednesday, November the 2nd, the Federal Reserve will deliver its latest monetary policy decision before the eagerly awaited US presidential election, which, as we all know, is taking place on November the 8th. Now, the Fed is expected to sit on its hands before the election to maintain stability and also to avoid unnecessary panic in the financial markets due to the high-risk event. Recent news this week that the Fed may be in a better position to normalise its interest rate policy if the new US president leans towards a more expansive fiscal policy sent the probability of a Fed rate hike above 70% last week. That's for the first time since last June, as US 10-year yields stepped above 1.8%. Now, of course, it's not just the FOMC meeting in focus in terms of the US next week, as we also have the latest employment numbers for the US. Now, the ADP report is due on Wednesday, while the non-farm payrolls, unemployment rate and the wages growth are all due on Friday. The market consensus right now for the October non-farm payroll report is 169,000 versus 156,000 printed a month ago. The unemployment rate is expected to have eased to 4.9% from 5%, while average weekly earnings are seen stable over the past month. Solid employment numbers could further enhance the Fed hawks. However, traders should keep in mind the high event risk pre-US election, with US yields and the US dollar potentially subject to high market volatility. Now, that's your quick wrap-up on the week ahead. We'll be taking a closer look at all of the events and data release I've just been speaking about throughout next week, plus much more. So make sure you do stay tuned into www.lcg.com/analysis. And also, why don't you connect with us on social media, just to make sure you're always up to date with our latest market analysis and videos. Goodbye for now.